Hello, everybody, and welcome to another segment of Market Masters. We're seeing some really, really interesting things happening in the world as a whole right now, but particularly with gold and silver. Gold is officially once again at an all-time high, over $3,030 an ounce. The exact number that I'm seeing right now is $3,034 an ounce, which is about $30 above what it was last time we did this segment. Big deal over there. And we're seeing a whole lot with silver as well. It all looks like it's coming down to an inventory, basic economics. As Kirk says, economics 101, supply and demand, less supply, more demand. People want to take a whole lot more of this, and there isn't that much to take from. So there's a lot to speak about today. But first and foremost, Kirk, I want to say thank you very much for being here. And we just want to know what the hell is going on, what we can do. You're always right on the money because we're seeing it in the money of these prices with gold and
Yeah.
silver specifically. So, what's going on? What can you share with us, and what can we do?
Well, a couple of things, and we have to do a little background history.
Sure.
Some stuff that we've already talked about, right? So over the last month, maybe 6 weeks, we've talked about gold leaving London, inventories being depleted there, and it was all coming home to CME COMEX depositories in America to roost, right? It's almost like repatriation of the gold, and then you had some puzzle pieces that were connecting. It's like, okay, it's all coming here. Why? Why are they wanting to audit Fort Knox? Well, to see if it's there. Why would they want to do that? Maybe a gold-backed currency coming up, which I want to address that before we're done with the show
Sure.
here, because there's a lot of disinformation that's spreading around the podcast and internet posts, and it's not necessarily real.
Okay.
Um, gives people this hope that we're going to have a gold-backed currency, and the law has already been passed, but it has not. So anyways, gold is leaving London. It's been getting all of the news, all of it, right? And
It, it's
silver's
been it's been coming to New York.
coming to New York, and silver's been in the shadows. Nobody's been covering it except for us. Nobody's really talking about it. But now that most of the gold seems to have left London, that story's diminishing some, right? And it's slowing down. You can't deliver something that's maybe not there. So now it's focused on silver, and this is where it's silver's time to shine. And we're seeing it. Even the price action as we record this, silver's low mid 34s. Good.
34.51, which is
I mean,
huge.
it's amazing,
Yeah.
right? And gold is going up too. Don't get me wrong. It's like at all-time highs. It's like 30.
Yep.
Well, in the investing world, perception sometimes is reality, right? Because we invest, I don't care if it's a stock, bond, mutual fund, gold, silver, whatever, because of the hope for future growth or for safety, or better yet, both of them together, right? So you would invest in a stock because you think, okay, this has a great product, this company does, it's very well managed, and the economy is growing, and in the future I want to have my retirement portfolio grow. So you would invest in something. Whenever there's a hurdle, policy change, global conflict, people automatically pull in the reins. It's just that's human nature. It's like I don't know, the future doesn't look so certain. I'm just going to sit in cash. I'm going to sit on the sideline. I'm not going to do anything. Well, when you have uncertainty and turbulence, people flock to something that's real, something that's tangible, something that's accountable. That's part of the reason why gold and silver are going up, because the foundations around us are eroding. For example, the global GDP numbers projections just came out yesterday, and they were expecting 3.1% growth, and now it's at 3.0 growth, which has come down just a smidge. But here's the real problem. And big banks, international money center banks, hedge funds, governments, they know that these numbers don't tell the full story, because that's if for the global economy to grow, GDP needs to be greater than the inflation rate.
Okay.
So inflation is unofficially around 12 to 15%. Don't believe the government numbers. They're artificially lowered for political purposes. But if inflation's at 12% and global GDP growth is at 3, well, that means you're actually losing nine. The economy is coming down by 9% globally. That's a massive contraction. That is a massive global economic recession. right?
Yeah.
So this is what Trump inherited. He's got to deal with this, right? So anyways, people, when they see these kind of things, start flocking to something that's real. That is the extra demand for gold and silver. Couple that with low supply. Now, something is happening. So when silver, the inventories are skyrocketing, just like gold did over the last 6 weeks,
Okay.
skyrocketing. But that doesn't mean that there's a lot of silver for us to buy because it's already allocated. When you look at the amount of physical deliveries of silver, it's through the roof. So you can't deliver something if you don't have it, right? So they're bringing it in from all corners of the earth, right? They're bringing it into CME COMEX so they can deliver it. That doesn't mean that there's inventory for us as investors to buy. Just means they're bringing it in because people who are on the flip side of these futures contracts are requesting delivery rather than settling in cash. So who is they? Who's wanting the delivery? We don't know per se. However,
What
these are,
sizes, what levels of money are we talking about here?
we're not even talking about a billionaire investor size. We're talking about potentially government size, right? Big, massive banks size. So this tells me that this isn't the individual investor like you and me wanting physical silver or gold delivered to our home. This could be why the gold was coming home to roost, so to speak, repatriating, wanting to audit Fort Knox because it might be used to back our currency, right? Moving forward. Then there's been talk about that. But here's where there's something really weird. I mean, beyond weird happening. So on March 14th, the CME group, which is COMEX, they basically came out with a special executive report. It
Okay.
was a simple one pager. And here's what it says. Delisting of gold kilo futures, London spot gold futures, London silver spot futures, and cleared OTC London gold forwards, collateral margin contracts. So effective immediately. And I'm just reading it. I'm reading this, right? So effective immediately, Commodity Exchange Inc., COMEX, delisted all of those things I just mentioned, and in the contracts below. So this result of delisting in regards to the contracts has been deleted
Wow.
from the CME Group website. So you can't even see it anymore. You can't see these futures contracts anymore. You can't see the open interest. You can't see how many longs, how many shorts. You can't even, and all past transactions are gone. So you can't even investigate and try to figure out, well, where's it coming from and who's it going to and how much is actually there. They don't want us to know something, right? So for me, when they delist something like that and you can't even see past transactions, tells me that something's up. And these are so big, it could be that the receiver, the end result receiver would be a government like the US government, the Treasury, or some other government, wanting to back their currency. So
You believe it's the United States?
I believe that it is. And the reason why I think that, I'm just connecting some puzzle pieces, is 3 weeks ago, Treasury Secretary Scott Bessent, when Trump signed the basically executive order to create a sovereign wealth fund for America, they said they were going to monetize the assets of the U.S. balance sheet. Well, they did that with oil in the sense of they opened up 629 million acres to drill, baby, drill. Now, there's speculation going on all over the podcasting world, all over the internet, that this bill, it's actually the Bitcoin reserve bill that was Trump actually signed, that
Yep.
says by December, well, actually, what it says is after the passage of this bill, 180 days later, the banks need to get certificates issued in gold or silver, and we'll talk about gold. So those gold certificates, gold is valued at $42.02 an ounce. They want to market to the market, right? Which means it's actually $30, $3,030. These banks that have all this gold or these short contracts are going to have to cough up the difference, $3,030 minus $42, so like 2,900 bucks per ounce, and send it to the US Treasury.
Whoa.
So everyone's thinking, wow, they're going to reclassify the gold at its market price. They're going to use it to back the currency. And 90 days after that 180, which would be 270 days, or pushing December of this year, people are speculating, oh, this is going to be, we're going to have a gold backed currency. Now, I think that we're going down that road. But the problem with this is this bill was floated in 2024 and it was dead on arrival. It didn't pass. This is what everybody's looking at is this old bill and applying it towards
I
today.
got
It's
you.
not the same bill. Now, here's what's interesting about it. The same person who wrote that bill in 2024, senator from Wyoming, and 4 or 5 other co-sponsors, actually just floated the new Bitcoin Crypto Reserve Act bill, which is HR 2032 and S 954 for the Senate. So I went to congress.gov, I looked it up, and sure enough, they have those bills now, but the text isn't available yet. So it could be that they're going to use the same language from the past bill. But I want everybody to know, because we want to provide truth and accuracy, right? And everything that we report, everything that you're seeing on the internet pertaining to this isn't actually reality yet. Now, let's hope and pray that it is. But now, this, what I think is going to happen, and some of these dots are starting to connect, they're hiding who the true recipients of the gold and silver are. They delisted these futures contracts. There's bills that are now being floated to the House and the Senate that there's language in the old cryptocurrency Bitcoin Act from 2024 that somehow, for some reason, in one paragraph says that we are going to revalue gold to market prices, and these big banks and the holders of these contracts are going to have to cough up the difference. And where does that coughed up difference go to? The Treasury Department. So that would lead to, yeah, we're going to have a gold-backed currency, right? So all of this perception is reality thing, right? So all of this is starting to build into the price of gold and silver. And that's kind of it's not necessarily a black swan event. A black swan is something that nobody foresaw coming. It just kind of just poof, it happened and it's a big deal. People could see this thing coming, especially when you start to connect the dots. So this is more of a function, Jason, of simply supply and demand. There's no supply really of silver to speak of, lesser supply of gold on the international level, because you've got big banks and countries wanting to use it to back their currency. This is why you're seeing the prices really start to soar. Now,
That applies to silver as well.
oh, it really, really applies to silver because gold is just a political barometer type metal. The more people distrust the government, the more they go into gold. Silver, yes, it follows in the footsteps of that philosophy, but it also is a manufacturing metal. It is used for manufacturing. It actually, every single month, there's so much silver being used that diminishes the supply. Now, here's the bigger issue with that is there's very few silver mines in the world that are specifically silver mines, right? There's like one in Idaho, in the Coeur d'Alene Mountains. So, but you look at that, where does it come from? It's a byproduct generally of copper mining. So that tells me that like the silver veins and the copper veins probably run together in the mountains, and it's a byproduct of copper mining. Copper is like the PhD in economics metal. It's used for plumbing and everything else, right? So as the global economy is growing, the copper mining is going to increase. As the global economy slows down, maybe those mines shut down, they don't become profitable, and therefore there's not going to be much silver mining. So you've got a problem with the source, right? Is that there's not going to be enough to cover even sustain current demand. I look at all of this and say, wow, this is going to be an exciting time for people that hold silver, and ultimately it may price you out. So Bank of America just came out with their projections for gold, $3,100 an ounce in the real near-term future. Another big firm, $3,200 an ounce in the very near future. Now, we've talked about the ratio trade, why we're actually in silver versus gold, right? It's because the historical ratio is like 20 to 1. It takes 20 ounces of silver to buy 1 ounce of gold. We're not there. We're like at 88 to 1. So silver is way undervalued. So even if we get to 60 to 1, okay, follow me on the math real quick, and gold is at 3,000, that should put silver at $50 an ounce. Well, what if it goes to 3,200 and the ratio comes down to 50 to 40, right? It's like, man, we could be seeing silver at 75 to $100 an ounce this year.
Yep.
As that ratio compresses and the demand for silver is outpacing the demand for gold. So this to me is really exciting. You've
So
also got,
I think it goes without saying, you would definitely, between the choice of going into silver or going into gold at this point in time, you would go into silver.
I'm still 100% into silver because I want to get free gold down the road by leveraging, so to speak,
A better ratio.
higher growth silver, right?
Yeah.
So now you add in Trump's tariffs. Trump's tariffs are going to put a damper on the global economy, but really increase the US economy, right? And so now you've got people like Lutnick, the Commerce Secretary, saying that by the fourth quarter, this economy is going to be humming. Exact quote. You've got Secretary of Treasury Scott Bessent saying in 6 months, this will be Trump's economy. Well, there's this old country song. I love country music, right? By Alison Krauss that's titled "You Say It Best When You Say Nothing at All," right? So cool song. However, I apply this to what they're saying. What they're not saying might be more important than what they are.
Okay.
Because when he says in 6 months this is going to be Trump's economy, what is he not saying? In the 6 months up until then, this is not Trump's economy. This is the hangover effect from Biden, and it's going to be ugly. Then you've got Trump saying, don't even look at the stock market right now. This is going to look great by the end of the year. So what is he not saying? Why is he not looking at the stock market? Well, probably
Because it's
because
not going to look great right now.
Right. And you look at the R word. Trump mentioned the recession word in his interview with Maria Bartiromo last week. Secretary Bessent is saying this economy, this market that we're living in right now, it should have been fixed in 2008 and 2009, but it wasn't. It was held together with stimulus money, and he stated the stimulus money that was keeping the stock market propped up was basically coming from USAID.
Yeah.
Using a nonprofit to filter all this money to keep the stock market propped up. That created inflation. The growth wasn't real. Now we have the hangover effect from Biden, and the next 6 months could be ugly. Like ugly. This is what they're not saying, but yet they're kind of saying it. But don't be dismayed. Have hope, right? Things are going to turn around. This will be Trump's economy in 6 months. And as Lutnick said, it's going to be humming by December. And I agree with that. Right. So here's where we're going to have some turbulence. We're going to have some turmoil. During times like that, people want flight for safety. They want quality. They want something that's real because the foundations around us are eroding. Now, I need to add one thing because over the last few months, I have literally seen hundreds and hundreds of invoices of people who bought gold or silver from other dealers. Every podcast you look at, whether it's on Fox News or independent media, or, there's always some dealer pimping gold or silver.
Yes.
Like it's everywhere. Well, not all gold and silver are created equal, right? So a lot of them will focus on selling collectibles, semi-rare coins that sell for like $60 to $80 an ounce silver. That junk and I call it junk. Not all silver is good silver. Not all gold is good gold. So when you have some kind of a special piece, a 2-ounce, supposedly Canadian government mint, wildlife coin, that's not an official Royal Canadian Mint coin. They only have 1-ounce variety. So this is some commemorative piece that a dealer asked the Royal Mint in Canada produce that they can sell in limited quantity and sell for massively high prices. Why do they like that? Because it comes with a massively high commission, right? So, but when you go to sell that, and I've had to deal with hundreds of people that have called our office that we have to be the bearer of bad news. It's like when you sell that, the depositories don't want it. They're going to give you 4% less than spot. They're going to melt it down to make it into a coin or a bar. So all of those premiums that you just paid go to waste. So that tells me that on some of these things, for you to break even, silver would have to be $80 an ounce.
Yep.
Oh, what a chip. This is why we focus on bullion, which it's 100% liquid. It's low premium to begin with, and we charge 8% when you purchase, 0% when you liquidate. You know that you don't have to recover these massive spreads to even break even. See, this is where I want to warn people. It's like if you bought something like that, call our office. We'll help you walk through it, try to figure out if we can reposition into something that's going to grow with the market and get you out of a bad situation. But call us. We'll help you. I do this all the time. But be careful when you hear somebody on a show that you trust, the host, because the host generally doesn't know what kind of business practices their sponsors have, right? So I just, it breaks my heart when people were duped into buying something that's going to take them forever to recover from. Could they in time? Sure. Silver goes over 80, 60, $80 an ounce. Yeah, they're going to recover, but that you don't have to
But
live like
instead of recovering, you can double. Why would you do that?
exactly. I mean, this is the point. As we now have most of the eyes in the world now looking at precious metals because gold has surpassed $3,000,
Yes.
right? So what is that going to do? People are going to say, wow, all-time high, it's over $3,000. That's a major psychological threshold level and technical as well. But when all eyes are on it, people are going to be promoting it more. Now, when all eyes go on gold, more eyes are going to go on silver. They're going to realize it's even more of a discrepancy of supply issues. And this is where we could start to see an acceleration and a really good one in the prices. And it's why every single week we shout from the rooftops, this is a fantastic time to allocate into gold or silver because it's safe, safer than a paper asset that could vanish overnight, safer than a digital asset that could vanish overnight. Tangible assets don't vanish. They're what
Correct.
they are. They're things. They're there.
I remember when we first started doing these podcasts and these interviews, you were saying the same exact thing, and it was $18, and then it was
Yeah.
22, and then it was
Yeah.
25, and then it was 26, and then it was 29, and then it was 30, and then it was 32, and now it's 34, and it's going to 35, and it's going to keep going in that direction. And for the people that are watching this right now, I know a lot of people always say, when is the right time to do it? And to me, it's almost like real estate. It's always the right time, really. There might be bad times in between and short cycles, but there's no such thing as real estate from 20 years ago that has not appreciated today. And it's the same thing today. So I always live according to that, even when it comes to metals. It's always a good time to go in. For those
Yeah.
of you who haven't yet and who've kept waiting for some sort of crash, let's see it go back to 18, we'll get there as well. I wouldn't wait because it's a shame. And you could if you want to, but there's an opportunity. That's why we do these shows to show you an opportunity that you could take advantage of in these times. That's why Kirk does the work that he does, because he wants people to be able to take advantage of times of chaos and actually end up in a better position at the end as opposed to in a worse position at the end. And that's where I think metals really hold for each and every one of us right now. So you're 100% in silver. You know where I'm at. I'm in silver and I'm in gold only because I like diversification.
Yeah.
But I see exactly what you're saying. And it makes a lot of sense with the proportion that you're talking about and the ratios that you're talking about. And maybe we'll keep going harder in silver right now.
Well,
Because,
and having a diversified portfolio in gold and silver is not a bad thing.
yeah,
I mean, gold's at all-time highs. It's going up too. Just to have more optimization and over allocating into one that's going to grow faster. It's like, sure. Now, over the past 6 months, silver and gold's probably outpaced a little bit because gold has been getting all of the attention. That's going to shift, and it's starting to shift right now. So you're not going to be wrong by having gold and silver. They're both growing. I mean,
Yep.
that's our goal. Um,
You
I
still
just
can't lose. The question is, how much are you going to gain? You know what I mean?
exactly,
Yeah.
exactly.
Yeah. Yeah. So, number one, Kirk, for anybody that wants to work with Kirk, that wants to learn more about this, to book a free consultation, you could use the link in the description below this video. But Kirk, real quick, on the topic of 401ks and IRAs and all that, can you just touch up on that, on where people stand so they understand the accessibility that you have, not just a lot of people ask, is it just in the United States? Do you deal with people outside of the US? So if you could touch up on those questions for people that want to book that free consultation with a link in the description below.
Yeah. So IRAs are simple. They're just a rollover, tax-free rollover, whether you have a Roth, a traditional, simple SEP. If it has IRA in the name, we just roll it over into an IRA that can be denominated with physical gold and silver. They have to store it for you in the depository because it's not a certificate, it's actual physical coins or bars. 401ks are different because they don't allow for ownership of precious metals. So, but there's still options in how you can do it. If you're over 59 and a half, you can do an in-service rollover, meaning you're still at your job and you just take whatever portion you want. You could take all of it, some of it, roll it into a traditional IRA because you're older than 59 and a half. If it's a 401k from a previous employer, that rolls into a traditional IRA. See, you can only have physical metals in an IRA, not in a 401k, but we can still access 401ks under certain conditions to do that. Now,
And are
because,
all these questions are answered in detail when they do that consultation with your team?
oh yeah, for sure.
Awesome.
Because everybody's different. It's why we don't even put some of this stuff like on a question and answer on our website because everybody's different. We can't use a cookie cutter approach, right? And we want to dig in deep into your circumstances, your goals, your dreams, your fears, all of it, and craft something that will accomplish your goals. Now, in the past, and things are changing rapidly on the global economic level, banking level, know your customers, things of that nature. We are not doing international clients anymore, unless you're international, but you happen to be a US citizen with a US bank account. You may be stationed overseas in Japan or something. Then we still can. But boy, there's anti-money laundering laws and everything else are making it really difficult to do business with international clients. Didn't always used to be the case, but it is now,
Got it.
right? So we can do international clients. If you're international, you're just stationed there, but you still are a US citizen that has a US bank account.
Got it.
So, I mean, those are recent changes. Unfortunately, however, it is what it is.
Fair enough.
You have to deal with the environment that you're living in, and that's just one of the things that we have to do. So,
100%, 100%, all good. I know a lot of people always have questions. I encourage everybody, book a free consultation with Kirk and his team with the link in the description below. It's a simple form to fill out. They'll get in contact with you, ask whatever questions you have. And I always say, worst case, you learn something and you don't move forward. Best case, you learn something and you have a great opportunity. There's
yeah,
nothing to lose, everything to gain. And I always like seeing people winning, especially in my own family and community. So, Kirk, I want to say thank you very much for your time. Thank you very much for always educating us. And thank you for being right on the money with everything that you're saying all the time. We appreciate it.
it's my pleasure. We'll talk soon.